The global economy just hit snooze on a ticking time bomb. Again? That's exactly what happened with the second 90-day extension of the China tariffs. Once again, the United States has delayed a major trade escalation, avoiding immediate economic disruption, but only postponing the inevitable. So what's really going on? Why the repeated delays? And what should we expect when the clock runs out? Again? Let's break it all down. What is this extension about? Back in April 2025, the U.S. imposed sweeping tariffs as part of the Liberation Day trade policy. The plan: 10% universal import tariff, 54% total tariffs on Chinese goods, additional targeted measures on Vietnam, Japan, and the EU. But in response to intense pressure from business groups, allies, and even Wall Street, the White House introduced a 90-day transition period to give companies time to adjust. That window was supposed to expire last month. Instead, another 90-day extension was quietly granted. So now, we're looking at a 180-day grace period before full enforcement kicks in. Why the delay? Let's be real. This is less about trade strategy and more about managing economic fallout. Here's why the White House hit pause again. Supply chain chaos. U.S. importers begged for more time to find alternative suppliers. Many rely on Chinese inputs and can't shift overnight. Election year optics. Trump's team doesn't want a stock market meltdown or consumer price spike just months before the election. Internal division. Even within the administration, there's debate over whether to go full throttle or phase in tariffs more gradually. The second extension is a tactical retreat, not a policy reversal. It buys time, but also signals that the U.S. isn't fully ready to decouple just yet. How is China responding? And Beijing's public reaction? Controlled, but firm. China announced it will maintain its retaliatory tariffs on U.S. exports, but won't escalate, for now. They're watching closely. Here's what they're likely thinking. Leverage delay as diplomacy. Use the extension window to lobby U.S. businesses and diplomats behind the scenes. Avoid retaliation fatigue. Too much tit-for-tat too fast can damage their own economy. Prepare for long-term decoupling. China is accelerating self-reliance, ramping up trade with the Global South and BRICS partners. In short, they're playing a longer, quieter game. What does this mean for the economy? The extension has short-term benefits and long-term risks. Short-term stability. Markets calmed down after the announcement. Importers got breathing room. Retailers don't need to hike prices before the holidays. Long-term uncertainty. The delay doesn't solve the underlying issue. It just postpones it. Business owners are still unsure whether to stockpile goods, raise prices, shift supply chains, hold off on hiring or expansion. The result? A paralysis of decision-making in some sectors. And don't forget inflation. Even with the delay, prices for key goods have inched up due to fear of future tariffs. What to expect next? Here's what to watch over the next 90 days. 1. Mid-October. Announcements: expect a major policy update just before the new expiration. It could be another extension or full enforcement. 2. More exemptions and carve-outs. Lobbying efforts will ramp up. Some industries, like semiconductors or pharmaceuticals, may get waivers. Third shift in China trade routes. Watch for Chinese exports rerouted through Vietnam, Mexico, or even Canada to avoid direct tariffs. 4. Business adaptation. Some U.S. manufacturers will double down on domestic production. Others will quietly raise prices and absorb the hit. 5. Political messaging. Trump will continue selling this as economic warfare and necessary pain. Biden, if he responds, may push for a more multilateral approach. One thing's clear: this won't quietly go away. Final thoughts. The second 90-day extension is a band-aid on a fracture. Yes, it calms nerves and buys time, but it also exposes the fragility of U.S. supply chains and the limits of hardline trade policy. Whether you support tariffs or not, the truth is this: global trade can't be reshaped overnight. And every delay, while politically useful, leaves businesses and investors stuck in limbo. So as this clock ticks toward another deadline, remember, tariffs aren't just taxes on trade. They're pressure points in a much bigger economic chess game. And we're still only in the opening moves. Like and subscribe for macro insights, global finance, and policy deep dives every week.